Evening all, it's Sunday the 24th of June, and I will go into some price action on XRP, but I thought I'd try and do something a little bit different today. So this one might be a lot longer in its length, so maybe, well, we'll see how long I waffle on for over points that I think are relevant to this video. So I asked on Twitter the other day for anyone who watches my price action videos, how many people actually use TradingView, as I was thinking of doing something a bit different. So thank you very much to XRP Boy and Logic DM, because they shared this little survey which obviously reached a lot more people than I alone would have been able to. So it was just to give me a bit of an idea of most people out there, what they're looking at, what their understanding is. So it was mainly to do with the charts, because all I look at is the price action. And, you know, I was thinking, you know, it's all good me putting on these lines and giving my opinion, but some people are going to be watching it, and although they'll take some bits away, they still just haven't got a clue how I've even come to my conclusions or my opinions. So it's just something I thought I'd do today to try and, in its most simplest form, walk through a few things that you can do yourself, so that you've got a chart set up for yourself that you can watch, and hopefully start to learn a bit more about how price moves, which is, you know, that's all I'm looking at, is just the price. So some 26% out of 46 people said they use TradingView all the time, which is great. So no need to teach them how to suck eggs. 9% said it sounds like a lot of work. Yeah, it is a lot of work, and I think that the 9% are mainly people that haven't got the patience for it, so that's understandable. Chart work is not for everyone. And then 65% charts are Greek to me. So I would assume, based on that option, is that these are people that are interested in the charts, but they just don't understand what it all means. The only analogy I can really think of, it's like getting into a car before you know how to drive. Yeah, you can probably give it a go because your mate showed you. Turn the key, put it in gear, put your foot on the accelerator to go, put your foot on the brake to stop. How hard can it be? More than likely you're going to crash. Something's going to happen that's not very good. You wouldn't get in a car and start trying to drive on the motorway without having understood the basics, or at least had a few lessons to really understand what's going on, what you need to do to drive that car. It's almost the same with the charts. You need to understand about candlesticks a little bit. There's lots of little things that you need to learn a basic understanding of, so at least you can interpret what people talk about, because I think a lot of people that do any sort of trading videos, if it's to do with forex, stocks, cryptocurrency, most people, I would say, use TradingView just because it's probably the most versatile and easy to access and usable platform that there is. So what I will say is, after you've watched this video and we get a few bits done, there are two people that I would, if you're really wanting to learn about price action, I would strongly suggest having a look through Akil Stokes's playlist, his videos. He does a podcast every week. I don't know if it's every day, but, you know, as you can see, fairly frequent podcast, but also the videos that he does, there's so many. And it's such great information that it would really, I think if you're willing to learn another one, you can watch his. But again, his trading, I guess, business partner, as it were, is Jason Greystone. Again, lots of great information, lots of videos, lots of stuff that is worth watching. So, before we even look at the chart, there's a few things we need to clear up, really, I think. So if you've got pen and paper, it might be worth just to take notes as you're going through, because writing things down, typically it stays in your memory, cements, it creates more of a pathway than just typing it. But first things first, I am not an expert, and I don't claim to be one. I'm just a person who likes the charts, and from seeing certain videos and certain posts on Twitter mainly, it is apparent that the majority of people have gotten into cryptocurrency and they don't understand what's going on. They've seen what's happened with Bitcoin, and because of all these new ones that are coming out, all these other coins, they feel that this could be the ticket to financial freedom. But I think too many are focused on instant gratification rather than this is sort of a longer term investment. What you have to remember is it took Bitcoin 8 years to even get to a point where we're looking at sort of four, in £1,000, 4 digits. And it's only the last year that Bitcoin really flew up. Okay. I remember my brother's mate saying he was buying Bitcoin, and this was back last summer, so about a year ago, when it was at £3,000, it was pushing up. And we were looking at the chart, and at that point, I think the all-time high might have been 4.5. It was just pulling back a little bit, but we were sort of saying we might want to wait a little bit before it goes off. If you said to us then that it was going to £20,000, we would have sort of gone, really? How'd you get there? It's crazy. But again, I'm not an expert. Anyone who's claiming they're an expert, I think is talking out the backside. There are a lot of people that are informed because they understand the charts and they can interpret that. So I would just be wary of anyone that's claiming to be an expert or some guru, because there isn't. The crypto world is so new and it's in its infancy. Even the charts are so, there's not enough information to really give historic price information that we can use. Obviously, we've got what we have at the moment, but I'm not an expert. And again, this video is just my opinion. This is not financial advice. I don't give financial advice, because guess what? I'm not a financial advisor. I'm just giving my opinion on the chart and what I feel may happen based on the information the chart tells us. The only person I care about is me when it comes to my holding. I don't care how many coins people have. There's going to be a lot of people that were informed enough that they bought some at 2 cents. There was a lot of people that bought at 20 cents, and so on and so forth. But I don't care if you buy more, if you sell. It doesn't bother me, because it doesn't affect me. You making millions of pounds doesn't affect me. You losing millions of pounds or thousands of pounds, hundreds of pounds doesn't affect me. What affects me is what I make and what I do with my own holding. On a few videos I've seen people, or live streams, where people are asking how much people are holding. How much should I have? How many do you have? When should I sell? When should I buy? And it just makes you want to scream, because people are clearly not taking the time to really research what it is they're actually looking to buy. Other people's holdings is irrelevant. Doesn't matter, because you don't know what their financial situation is. Some people can afford to lose tens of thousands of pounds, where other people can afford to lose a couple of £100. Other people can't afford to lose that money. So I just think, stay in your own lane, build your position with money that you can afford to lose, if that's what you want to do. I mean, like I said, I'm not going to tell you to buy, I'm not going to tell you to sell. All I'm going to go over in my videos is my opinion on where I think the price will go. What you then do with that information is down to you. Okay? Just making sure I got enough drink here, because obviously it'd be a lot of talking. So, and I've seen a few people getting upset that other people have sold their holding, but guess what? That's up to them. I'm not bothered by what the price is doing, because for years I've gotten used to losing money by trying to trade shares, trying to trade Forex, and you almost, the reason I can understand these charts is because I've had to go through a lot of failure, a lot of financial loss, to really learn the lessons that I've needed to be more informed in the future and be in a position where I can make better decisions. I think the best thing I can say to you is do your own research, come to your own conclusions, and from there you're the best person to give advice to yourself about what you want to do, what can we do, how much can you afford to lose. Like I've said in all my videos at the bottom, if the price went to 0, would you be able to sleep at night? That's all you've got to keep in the back of your mind, is if you were to lose absolutely everything, what would happen? So that's really the only 2 points. I'll keep this open just in case I think of other things that we need to look at. So what I want to go over today is just a few things. So one is as we'll come on to now, is if you want to look at the charts and set this up for yourself, tradingview.com. Just making sure I've spelt that correctly, because as you've seen, my spelling is is horrific, but this isn't a spelling test. But yeah, tradingview.com. That is where we're going to be looking today, and this is where you can go to set up a free chart, a free account. It is so easy to do, but also it just gives you a place you can save your chart, you can look at it and just watch the price and see what's going on. One thing we'll look at is key levels, just where to set them, what they are, and a bit of information around them. And that's about it, really. Price ranges, that's just going to be an area where price has been moving, and a bit like structure. So more sort of support and resistance type things. So if you haven't got TradingView, if you go to tradingview.com, you don't have to set up an account, but it's just easier for, when you've got your chart set up and you log in, it's just there. It remembers what drawings, annotations, things you've got on. So you can just make your life a lot easier. You're not having to reset everything and add things on. So when you get to TradingView, you can set up your account. If you click on chart, this is where we will load up the chart. Now, obviously, I've just been on here before I entered the video just to make sure we're on XRP USD. Now, on XRP, when you put XRP USD, it will bring up a lot of different exchanges. Now, I've been using Bitfinex because I found the price matches what's actually happening on the trading platform that I look at, but also I buy my XRP through Binance. So really, I should be using Binance because that's where I look at for what's going on. So you can select whichever one you want. I would say either Binance or Bitfinex, just because the price gives more accurate representation. That said, on Bitfinex, that's where I saw the wick. That's why I like Bitfinex, because for some reason all the other charts don't, but it showed the wick, and that's what we use to identify. Now, when you come on, you're going to be greeted with all this sort of crap, which really you don't need it. You're not going to need it because you're not going to understand it. I mean, it simply shows volume, and I see a lot of people doing their videos, and for me, it's just a distraction because I don't use it. So a lot of these things, when you add stuff on, so like indicators up here, you can add Bollinger Bands or MACDs or RSIs and all this other wonderful stuff, moving averages. And the only thing I really use was the exponential moving average ribbon. So I only want 3 of them, so I've set this up myself. So you can just click on the X and you can change it. So all I ever use is a 200, which is for the overall longer moving time frame. Just change that to black and make it thin. I use the 50 moving average. Again, you can just set these up to however you want. This is just what I use. And then I use the 14 EMA because I find that the 50 and the 40 give me the best indication of what is potentially happening. And again, it is an indicator that is lagging, so it just means it's not directly happening. All the information is from the previous days. So these periods, 200 is giving you an average of every 200 candle close, 50 every 50 candle close, and 14 is every 14 candles close. It makes these lines move up and down what it's doing. And once you learn how to read these candles, again, you can sort of anticipate moves and where they're going to cross and all the rest of it. But that's just what I use. I don't expect you to want to use them or understand it. I mean, the charts, you may have noticed all my charts are black and white. That is just because I've found that's more of a neutral type setup, which doesn't, it's more for my other trade on the Forex. It doesn't give me any bias, because you see lots of green, you think, oh, it's bullish, or lots of red is bearish. Now I just put black and white, neutral, and your mind doesn't associate that those bearish or bullish moves as much with a neutral color. Now you can get rid of all these things or play about the different color schemes by clicking that cog. So candles, the wicks, you can muck around, take off the grid lines or make them white so there's no grid. I don't like to work with the grid myself. I just like it as blank as possible. Again, it's just purely distraction, and that's what you're going to be left with. It's just price action, and that's what I want to look at. So you can, once you've signed up, logged in with your email, you can set up your chart just with a few little things, just so you've got it sat where you want it. And again, you can use whatever color you want it, whatever background. It's just so you've got something set up that each day, if you favourite, like, you can come back, and once you put in your key levels, which we'll come on to, you can, just load up the trading view, and it's all sat there. So, I'm not currently logged in, so we'll just go back to trading view. We'll go home, and we'll just go log in, just sign in, and when I click on my chart, my chart is just, as all my tweets from earlier, it's just black and white, and it is doing what it's doing. And again, for me, it just makes it a lot easier. So I'm just going to delete everything. So what we're going to do first is, if you're following along or you've got your chart, we're going to look at key levels. So when we talk about key levels, we're simply talking about an area on the chart where price has shown is gravitated to. And a key level is one of those places on the chart where, when price gets to this key level, two things are going to happen. There's a good chance that it could bounce, or if it breaks this key level, it could give us indication about where we could go next. And you'll probably hear me say a lot about indication. There's a possibility, because ultimately anything to do with the price chart, it's all about probabilities. There's no certainty. No one can say 100% of the time what will happen. There will be people that, because of their understandings, will be right more than they're wrong, but they understand the fact that it's probabilities. And a lot of this stuff on these charts is mental. It's mental warfare, really, because it's just people getting scared, selling, people being bullish and buying. It's everyone's actions. The market is unpredictable because every day it's different. There's different people trading, different people buying. At the end of the video, I will suggest a couple of books that I found that were really helpful, which give you an insight into this sort of thing if you're into your books and understanding why we think the way we do. But going back to key levels, we're looking for areas on a chart where prices shown in the past, what's going on, and if it's respected that level in the past, or if it's broken it in the past. And that's how we read price action. It's because we're taking information about what's already happened, and we're then looking for a certain pattern or a certain price movement or number of candles to form in a certain way, along with indicators, which again can help us establish a better bias, a higher probability of something happening. Where it's going to happen, I have no idea. But what I thought I would do is share a few of what I feel. Again, everyone's could have their own levels, but what I feel on Ripple or XRP, I can't say Ripple because it's not Ripple, it's XRP. What I feel is key levels. And this is the other thing. It says Ripple versus the US dollar. It's not really Ripple, it's XRP against the US dollar. And I think this is the other misunderstanding is people are going, well, Ripple have got all these deals, Ripple have got all this information, all these banks, all these things. That's Ripple. We're talking about XRP, which is the asset that Ripple uses and utilizes to make their technology work. And I think that's why there's a lot of disappointment, because people don't understand, or they can't differentiate between what is going to affect Ripple and what's going to affect the XRP price. If we were all buying shares in Ripple, then yeah, I would be pretty stumped if the price was going down, because you can imagine as a shareholder, you'd be thinking, well, all the deals, all the things that are going on, the price should be going up. But what people need to realise is this is XRP. This isn't Ripple, it's XRP. It's the digital asset that they use to make their technology provide the value to the companies. As you can tell, I do tend to waffle on a bit, but it's all in the quest to make sure that the information I'm given is as factual as I can and not as hypey. Anyway, so what we need to look at, I mean, some people, when they're drawing the key levels on, they will have lines and lines and lines and lines fucking everywhere. I will apologise if I swear. Sometimes they come out, but, you know, I've been on my best behaviour. So, what we need to focus on is, where are the most recent levels? What's the most recent? That's all that matters, is the most recent levels. It doesn't matter about the highs back here. Yeah, we can draw a key level all the way. I would say a key level, for example, on the daily. Let's go to the weekly, because this is the other thing. You need to look at the higher time frames. People look at like the 5-minute charts. You don't look at the 5-minute chart. It's just going to confuse you, give you mixed signals, give you the wrong information. You need to understand that professional traders, people that understand charts, are looking at the bigger picture. It's always about the bigger picture. They're looking at the next couple of months, the next couple of weeks, not the next 10 minutes, the next couple of hours. The next couple of hours price movement to them is irrelevant, because they're not looking at that. All the big boys are looking at the bigger time frame. So when we go to the weekly, because again, you can see what I was talking about earlier, the chart is so young that there's not that much information. But at the moment, the all-time weekly high spiked up to here. I know on different charts it's going to be different, but, you know, candlestick-wise, I'm looking for a key level where price has gravitated to. So although we've got this spike, I would say the key level is where the price pushed up and closed, and the next candle opened and then pushed down, because it showed on here that when the next weekly candle opened at this point, it did push down lower. Now, when I've been looking at key levels, I talk about even handle numbers, and the reason I've done that is because of the information I've learned from other people, that price generally tends to respect round numbers. So I don't know why that is. It's just one of those things that, you know, so if we're looking up here on the, so again, we know we've looked at the weekly to establish this area. I would say maybe 700, just round it down, because it just makes it easier to read the price movements and calculate movements as well. So there's one level right at the top, and that's if you're at the weekly. But like I said, this weekly key level is pretty much irrelevant at the moment, because we're nowhere near it, and it just doesn't matter. What matters is where we've been recently, and what levels we have at the moment that we could get to. What could we break? So as we can see down here, I would say a recent level is gonna be, what are we saying, 47, sort of 46, 300, 750. Let's have a look. Where's price generally got the most touches? I think the 47 cents level is a good level to have, just because we can see we've got 1, 2, 3, 4, 5, 6, 7 touches at the moment where price is. So that's the bottom of this particular price range. And as I mentioned at the beginning, a price range is somewhere where price has gone sort of up and down, up and down. So when we're talking about consolidation, generally price is moving sideways. And in a lot of my videos, you'll see me drawing these boxes saying this range here. What I mean is, although there's been down movement and up movement, price is stuck within this box or a box on different time frames. You can look at the range, and when we either break below or break above, an indication that price might be moving is when the price comes up, it pushes back down, rejects the previous top or bottom of that range, the support or the resistance, and then starts to move away. So let's just set up a few other key levels. So I would say, in my opinion, at the moment, ones we need to be looking for that have the most relevance, 47 cents. As I put out earlier, on the lower structure, because as you can see, there's no structure when we look left, apart from we break down. There's a good chance that if we put in 30 cents, I saw 30 cents, and again, that's really, for me, the next area where there's touches, there's wicks, there's wicks. It was a previous area where price kept touching, falling, then we broke. So 30 cents is, I would say, the next area, the next key level that is important at this moment in time. The other key level, well, there's going to be two. I was saying that I felt that 60 cents was another level, that just for recent price action, we weren't breaking above. And as you can see, price has been going down progressively under that EMA and has been failing to make new highs. So after 60, we've got our next level of structure, and all I'm doing is just looking at where the most common areas are. I mean, 70 cents looks like a good area. Again, just a round number. And then one last one, just because looking at the daily, you know, obviously the next place you're going to look is going to be around here where prices sort of tried to go, but it hasn't. So what we're saying, there's some structure there, but looking at the tops, I mean, maybe 92 cents. Again, you can play around with these levels. It's not set in stone. There's not a, you know, this is just the levels that I've been looking at. So that's how you can put your key levels in, just so you've got something to, even if that's all you do, when you open up the chart now and we look through the different time frames, you'll start to see things make a bit more sense. That, you know, as prices come down, we got more information, and again, you got to step down the time frames to find more information. And obviously, the bigger time frames, the higher time frames, give more directional outlook for the future, weeks, months, whereas the short time frames maybe for the next hours, the next couple of days, the next week. So, you know, prices come down, we've broken down, tried to push up, broken down, and again, you just see it just becomes more apparent on these lower time frames that you can see where the price is sticking to these lines, these key levels, and what it's doing. And that's, you know, you can just sort of just play about with the chart, is all I'm going to say. Is you need to spend a lot of time before this becomes a bit of a habit, but the more you play around with something, the easier it is to understand, and the easier you start to read what's going on. So that's just where you can put your key level. So if nothing else, at least when you're looking at what's going on, you've got these levels. So I generally tend to stick to the 4 hour and the daily, just because it's a lot less noise. There's a lot less noise, a lot less confusion. It's more smoothed out. So that's a 4 hour. For example, if I was doing all my analysis just on 15-minute charts, I mean, you know, it can get a bit crazy, because you'll be looking at the charts and you're going, oh, brilliant, price is moving up now, broken these highs, we're coming back, it's going up, and then it just drops off the face of the earth, and you don't know why, and it's because we're not looking at the right time frame. it just tells the wrong story. The story you need to be reading is the bigger picture. And you'll probably hear people that know what they're doing talk about the bigger picture, and the people that aren't worried understand it's about the bigger picture, the longer time frames, because they're waiting weeks, months, years before they do anything. And all they're thinking now is, my, isn't this great? Because I can add to my position. And I think I saw a tweet earlier by, I think it's Kryptonary, saying, bring on 30 cents. So I know he's made a lot of money trading, and I know the people that he trades with, and I know they make a lot of money, and I know they understand the charts, so it doesn't surprise me. But again, they're looking at a similar thing. So let's take a look at the price, because at the moment, like I said in my tweet, what did I say in my tweet? I know a lot of people were probably crying in the cornflakes. Look at this price, but what have we got? Woo. So we broke this previous trend line. Price had broke down. And I was saying that there's a chance we could either, if we respect this zone, we could try and push up to this zone, maybe then reject, go down, just because we're in a bearish market at the moment. I'm just thinking that all the indications are giving me signs that price is still continued down. We had a little pullback up to the 14 EMA, we broke down. From a trading point of view, again, the reason I was using these fibs just to see where price might go before looking at reversals. It pushed down to this 1.618 inversion. I mean, I won't go into the Fibonacci's today because I think that's just too much information, and people might not understand it. But we'll see. We'll see. I might just do a separate video. It's just probably easier. And again, there's other videos just on general price action about Fibonacci that will probably explain it better than I can. Let's be honest. Like I said, I'm not an expert. So next raw lever structure is 30 cents. So the zone we're at the moment, or this key level, I drew a zone in, and how I define a price range is like this. So I get the rectangle tool. So down here on your menu, you've got where you can draw trend lines, horizontal lines, different arrows, channels. Brilliant. The next one is about Fibonacci's different measuring tools. Obviously annotations, different types of patterns and Elliott waves, and different things to do with the actual trading. So the way I identify a potential price range, or as some people refer to as a zone, is I get the rectangle tool. I'm looking for where price has sort of closed. So the lowest close. So the close is where the body of the candle stops and the new one starts. And I'm looking at where the wicks have pushed. So that gives us an indication of where price tried to go. So if I draw a zone there, I've got the tops of these. Let's just zoom in a bit, just make it a bit clearer. A bit clearer. I've got my zone drawn, and this is where we can sort of just make it a bit bigger again. I've got my zone drawn at the bottom of here. So again, we've got where price is closed, lowest closes from this general area, and where price is pushed. Now, the way candles are formed are the body open. So where should we look? So let's look here. So the body on this candle. So we had this candle, the price of this candle pushed down. We've gone back up and it's closed there. So what happens is on the next candle, so on the daily, so each candle represents a day, the next daily candle opens here. Price then is pushed up, couldn't go any further. Price has then come back down, and that's when we see, that's what forms wicks, where price pushes and retraces. It's pushed down the opposite way. It's left another wick, and it's come up and it's closed. So where the top and the bottom of the body are, if it's bearish, on my chart it's black. So the top of the candle's where it's open, the bottom's where it's closed. It's black because it's closed lower than the previous price. And this here is just where price has gone. And when you break down the candles, you call it, I guess, the autopsy of each of these, you go down to the lower time frames, you see how the other candles make this whole structure. So then the next candle, we've opened, pushed up, the body's pushed all the way back down, and then we've pushed back up and closed here. The next candle, we've opened, we've pushed down, and then we've pushed all the way up. And on this candle, we've closed higher than the close of the lower, creating a bullish candle. So on and so forth. Again, there are a lot of videos on candlesticks, how they're formed. I would probably say you'd have better luck watching some of those videos because there's just so much information there. But the most important thing I'm looking at the moment is the key level, and I'm looking for where price is going to close. And the reason I like the higher time frames is because imagine when this was forming on the 5 minute or the 1 hour, when price is all the way down here, you're thinking, oh, it's just going down. But it's pushed back up quite significantly. And price does tend to do that. It's, I mean, look at today's price. We've pushed down. We pushed down to, this is where I wish I had more money, 43,877, give or take. If we looked at lower time frames. And what I said yesterday was this. At the moment, all people are crying, not understanding what they've bought, what's happening, why the price is going down or up. The one thing I was saying is, it was a close. For us to go lower, we had to see a candle close below this bottom wick. So the 49 cents wick was here. The price did close below. So am I surprised that we've gone lower? No, I'm not, because price did close below this wick, which shows that the next area, if we look left, the next wicks to watch out for are these. Now, you'll hear in some videos that you might watch is if we have a higher close, higher high, higher close, a lower low, lower close, we're talking about where the candle is closing and creating a price higher low compared to previous candles. So this candle here created a lower low because the price at the close of that day was lower than the low of this candle. Vice versa for a higher time frame. So, you know, you would class this candle here, big, you know, the bullish going up. So we've had price push up a higher high, higher close. The next day, higher high, higher close, and then price has gone up. At the moment, if we respect the 47 cents level, so if this candle closes above this line, above 47 cents, and then the next candle starts above this line, there is a possibility that price will respect this level and go up. It's not an exact science because it could then just fall off the face of the earth and do what it's going to do. But again, it's about the probability of something happening. So for me, as long as we close above this level, that is a better sign that things might have found their bottom. Because again, look, this price has really tested this range. Like I said in my last video, it's this range, and again, price has respected this range so far. Ideally, I'd want to see price close above this range. So I'd want a close above these highs, these lows, sorry. Get the direction right, Joe. Close above these lows, just because then it could potentially come back up, test this EMA, and then it could go down. Because, let's be honest, I don't know where the bottom is. Is this the bottom? I don't know. I wouldn't pile in right here because I just don't know. As I think most people in the market at the moment don't know what's going on. So that's what we've got, I would say, at the moment. So let's just drop down to the 4 hours, see what's going on, and then we'll see what the 1 hour is doing as well. So as we can see, let's just go back to daily quickly just to reiterate my point. On the daily, we're seeing this big wick, okay? Price pushing down, moving around. On the 4 hour, that daily candle is made up of these smaller 4 hour candles. So again, what's created the wick? Well, price came back up, tested the EMA, fell off the face of the earth for a short time, moved up, price filled this wick, and now in the last 4 hour candle, we're pushing back up. So that's where price has gone down. We've pushed back up, and you know we've come up to this 14 EMA. So this is going to be interesting to watch because again we've got this structure here. So what better time than to come on to a bit about support and resistance? Support is simply where price is pushed down. It's had trouble breaking that level, so it's found support. It's moved up. Resistance, the polar opposite. Price has gone up, so Price has moved up here. We've been pushing, but guess what it's found? It's found resistance, respected the level, and then pushed back down. And what you find in these ranging markets is that price will bounce around a bit like a ping pong ball, where support goes up and down, just bouncing off support and resistance. It's not until this is broken, so for example here, we've had a 4-hour close below this low, and now price is pushing back up. This is where it gets interesting, because what you tend to find happens in some circumstances, which is again where people find entries for trades or places to buy or sell, is once structure is broken, we're waiting for a retest to really see how strong that level is. So here, we've broken support. What we're doing now is retesting that support. So this is where you might hear that phrase, support becomes resistance, resistance becomes support, because what happens is once the price has gone lower, lower low, lower close, what you might expect to happen is the price pushes up and it fails now. This gives new structure just because there's information here. And when this EMA closes, there is a chance that the price will respect this EMA and price will go down. Let's have a look on the 1 hour, because again, things start to change when you go around the 1 hour. So let's have a look at these 4 hour. So 4 hours mean one of those 4-hour candles. But again, it's a different story here. So yeah, we have pushed down, but we've created a double bottom on the 1 hour, which that's a good sign for support. And look at that, for a bullish engulfing candle. Engulfing simply means the last candles, it's just enveloped them. So we've had a higher high, higher close here. Now you can start to see what I'm talking about the different time frames painting a different picture, giving you a different story. So what could happen now is, oh my God, we've had this bullish close. Joe says if it's a higher high, higher close, and that's a good thing, that if price comes down and tests support, it could go up. So, you know, yeah, on the lower time frames, this could come back down, retest the 14 EMA, and then go up. Let's have a look at the 15. Oh, well, on the 15 minute, even better. Look, so we've created these wicks. Price is now above these EMAs, and we're going up to the 200. But what if we look left? Look what we've got here. So this is where the support becomes resistance. It's a bit clearer on the lower time frames sometimes, just to see how it's broken down for smaller moves. But again, we've had 1, 2, 3, 4. You know, a real strong. You know, the market. People have been loving these prices. You can tell because they've been buying it up. But again, I would say you need to look at the charts. Even if it's just once a day for half an hour, just going through, just scroll through and just see what you can see. The only way you learn is by doing things over and over, repetition. Now, the EMAs, as I said earlier, these are a moving average, exponential moving average. So it's just the moving average of the price after certain periods. Say the black line is after 200 periods or 200 candles, given an exponential average of the price where it is. As you can see, it's going down. As I mentioned in my previous videos, this is a big one because the bigger, like with the bigger time rate, because it's a bigger close of candles, bigger selection of information, it gives you the strongest indication of where price may go. So when you're respecting it from beneath, bearish. Flip it up, bouncing off it from the other side, and above, we're bullish. The 14 and 50, again, that just gives you some crossovers, and you can see that there's lots of wonderful techniques called, I think, the golden cross, and how these tie in with other indicators, and people make strategies and all kinds of things. But for me, when price is respecting the 14, that generally is giving me the view and telling me the story of where price is going. So as you can see, price has just been staying away from the 14, which means to me it's bearish. When we pull up and you see wicks, exhaustion, bearish. The crossover, it doesn't happen straight away, but you can see here. So what could happen is that price can go up and it can cross over, which by the time it's crossed, it's an afterthought, okay? So what could happen is something like this, and we'll see how thin this is. So price, if we continue putting in higher high, higher closes, something like this could happen. So the red line could squiggle up here, and then the blue line could sort of go, Squiggly. Oh, that's blue as well. Such a wally. Right. So let's just change this one back so we can see what I'm going on about. But something like that will happen. At that point, though, price is probably already up here. So you're looking for other confluences. Now, I think that's more for people that trade rather than what we're looking at, because let's be honest, most people aren't looking to trade. They're looking to buy, wait till the price goes higher, and sell at a point in the future. But I'm very fortunate that because of all the tradings that I do on the Forex and looking at price, all I do, as I've said, is look at price charts every day. It's just something I enjoy because I just love the puzzle. It's a bit like chess, really. But the longer you do something, the better you get. And I'm not expecting anyone to learn and be an expert on candlestick charts in a week, in a day. It's going to take months and months and months of practice of looking at things. Yeah, in a couple of weeks, you'll probably be able to understand what's going on a lot better because you take the time to learn. But it comes down to the sort of person you are, I think. How persistent are you? How much do you actually want to understand what's going on? I think if people took the time to at least understand what price action is, what it does, how it works, then it would give you a bit of peace of mind. But also, it just means that you can pick out areas on the chart that to watch for. You know, these key levels I've been talking about at the beginning. It's just areas to watch out for. So you could be going, okay, well, you know, would I be surprised if we hit 30? No, because if things happen, if certain things happen here, I'm expecting it to go there because that's what price does. It gets drawn towards where other things have happened in the past. The fact of the matter is this: nothing has really happened here apart from the rocket taking off. And this is the other thing with breakouts and price ranges. When you're ranging for as long as we've been, typically, not all the time, but typically once the price breaks out from this range, and again, the whole year really, once we come down to April, last couple of months we've been ranging. When it breaks out, whichever direction that's going, if that's up or down, it's going to go with some momentum. I can see that people will probably sell out if price pushes lower. And if we certainly get down to 30, there's going to be people that are taking advantage of that. There's going to be people that are going to be selling out because they've just had enough. And then when certain things happen in the market, price then breaks out, and before you know it, it's moved so much that you're not even going to see these prices again. And where do you want to be when that happens? Again, when we look at when price does break up or down, we've got information that we can look at to give us an indication. The great thing about where we went when it was all-time highs, it gives us somewhere to aim for. Past here, anybody's guess. In the meantime, though, there's a strong possibility we could retest the recent highs. At what point, I don't know. But that is what I thought I would share with you today. Obviously, in the comments on this video, I would probably say if there's things that you'd like me to go over again, or something you liked about the video, or it's still completely gobbledygook, I tried my best. So I think I'll leave it there. I don't even know how long this video is. I didn't pay attention to what time I started it, but I think it was just, it needed to be done because although people are chucking out predictions, they're basing it on what the market is doing from a news perspective. So if Coinbase happens, if XRP gets used, if more banks sign up, etc., which you can't really determine or put a monetary value on that happening. And also, that's Ripple. That's not XRP. So, you know, it's going to be an interesting 6 months. But again, I think the people that are relaxed at the moment are the people that understand the summer months are when most of the traders or people that have been trading these pairs, guess what? They've got money, so they've jogged on and gone on holiday and they're taking a break. September through to Christmas, we'll see what happens. And, you know, I think the other thing is all currencies, cryptocurrencies, are pretty much tethered to Bitcoin. So at the moment, whatever happens with Bitcoin, it has a knock-on effect to the other pair, simply because when you're buying these cryptocurrencies, most of the people are either buying it against Ethereum or buying it against Bitcoin. And if the price against Bitcoin's going down, well, guess what? The price of the other coins is going to follow suit as well. So that's another way you can add confidence, is looking at the Bitcoin chart and seeing what that's doing. I've not really looked at Bitcoin recently, because again, I've just been focusing on, XRP. But let's have a little look and see what Bitcoin, if it loads, of course. So that's where my ranges were. And look, 6,000 key level. I put 10,000 key level there. So again, just a quick, what am I eyeballing? Possible area 4,900. Below that, well, 3,000, give or take 3,000. So if this goes down to 3,000, there's a good chance the XRP is going to 30 cents. And if it does, I know what I'm doing at that area. But again, stick to your own plans, whatever you're going to do. But for now, as I said at the beginning, these guys, very credible, very honest, lots of great information. So I will upload this and get this out. But again, as Warren Buffett said, be fearful when others are greedy and greedy when others are fearful. It's done in pretty well, and I think a lot of people take from that. So books, just before I end this video, as I said, I like to read a lot of different things. In the last year, it's mainly been a binge on sort of how the mind works and psychology and all that sort of stuff. It would help if the picture would like to load, wouldn't it? Will it load it from here? So that's better. There's a couple of trading books, but I think the best one I've read was Trading in the Zone by Mark Douglas, because it's got a lot of information. It's more psychology about the markets rather than how to trade. Obviously, there's an Elliott wave principle which explains about price movements. Obviously, a bit of Fibonacci, candlesticks, all that sort of jazz. But there's one trading book, Mark Douglas, Trading in the Zone. So, and a lot of, again, loads of stuff up here. That's just, I love it. I love it. Anyway, enjoy your evening. I hope you enjoyed the video. If you stuck through it, fair play. I know it's been a slog. And we'll see what happens this week, I guess. So in the meantime, just, if you like the video, like it, share it with people. If you want to subscribe for more of these ramblings, by all means do so. And, I'll continue my daily morning snapshots, follow-up video in the evening once I come home from work. And we'll just see what happens. And that's all we can do. So take care, everyone, and I hope you enjoyed this. And if you think other people might take something away, by all means share it with them. And it's here now, so if you want to go back over it, you can. Yeah, so take it steady. Oh, there we go, 52 minutes, so nearly an hour. But hopefully it wasn't too much waffle and there's actually some value, because that is what is the most important thing. You've seen there's a lot of people doing the research, which saves me doing a lot of digging. And this is just me trying to help people that want to learn, I guess. So yeah, happy days.